All right, time for my midweek recap here. This is Apple on a 5-minute basis. Monday, I was looking for a move over 155.40, which I did happen to come across. Pre-market volume was not significant enough to expect an overall runaway gap, so once it opened up, just sat and waited, had a nice little consolidation area and a technical buy area. Anytime you have a gap up over a significant level, whatever that level may be, per your strategy, per your plan, you want to monitor volume. Pre-market volume was not high enough to warrant anyone just buying and hoping it's going to run off. So what happened was there's a little indecision on the open, as illustrated by this opening, was it 25, 30 minutes. This here is the chart of price action for the 155 calls. You can see up here where the volume came in. This was where professional traders, people in the know, someone who knew what was going on with price action, actually got in and took a trade. So I followed along with those guys. Got in some 155 calls here at 183. Stop loss was down here at 155, roughly and a half, which put me at a little less than one half the delta at risk. So it was not a huge amount of money at risk, and caught a nice little move up. So got at 183, out at 212. Wasn't one of my 100% gainers, but it was good enough for an opening trade for the week. After that move, price action fell below the VWAP, and there was really nothing else to do, so it didn't even come up to my price target. Just kind of sat on my hands and waited. Tuesday, there was nothing for me to do. Um, Yesterday, Wednesday, was another one of those pre-market slight gap ups. It wasn't huge as well. So, same thing, just wait for a consolidation area. A little bit of a pattern showed up here, kind of a small wedge. Volume on the shares itself spiked, as well as the 157.5 calls, which I can throw over here too. And you can see where the volume came in. This is just something to keep an eye on. Price action is price action, regardless of whether it is the stock price or the options. So once price action spiked up on the shares, the volume picked up in the contracts as well. So I got in some 157.5 calls at 25 and out at 51. That was one of my 100% gainers, although it wasn't a huge move. 26 cents is not tremendous, but overall percentage-wise, it is a very nice move. I do have some new notes on here as far as what I'm looking for going forward. Let me go ahead and clean this up. Back to my daily chart over here so I can explain why I'm looking at what I'm looking at. This is a technical bull flag here. Flag is a little bit longer than what I would like in relation to the pole here, but this does have overall about $1.25 measured move. So if it does break above 156.75, I do expect to move up here to about 158, at which point I'm going to be looking at 157.5 calls. If it fails and falls below, no hurry to trade, just going to sit on my hands and wait. Technically, from that aspect over here on the daily time frame, the 8 EMA is about to cross up through the 21 EMA, which is a technical buy signal for algorithms, professional traders, all kinds of participants. So that should at least imply that there's going to be more bulls coming back into the trade, more participants. Volume did spike up just a little bit in relation to the past couple of days here. So more people are trying to get involved, more participants, I should say, are being involved in the trade. Do still look for this 158 level to be the next major selling point for bears. If it blows right through it, I'll be extremely happy and just ride out the wave and collect my profits. This will be my trade plan for Thursday. Good luck.